Bitcoin has come a long way since its inception in 2009. From a niche concept championed by cypherpunks, it has grown into a global phenomenon, attracting both individual investors and institutional giants. Now, as we approach the end of 2024, the question of whether it's still a good time to invest is a prominent one. The answer, as with most things investment-related, is nuanced and depends heavily on individual circumstances, risk tolerance, and investment goals. Understanding Bitcoin's current landscape before we assess the investment prospects, let's take stock of where Bitcoin stands in late 2024. Maturity and acceptance. Bitcoin is no longer a fringe asset. Its recognition has dramatically increased. We see institutional adoption, with companies like MicroStrategy holding billions worth of Bitcoin, and the approval of spot Bitcoin ETFs in some regions has opened the floodgates to more mainstream capital. Volatility. Despite growing maturity, Bitcoin remains a volatile asset. Price swings can be dramatic and rapid. This volatility is driven by various factors including regulatory news, market sentiment, macroeconomic conditions, and whale activity. Halving cycle. Bitcoin operates on a predetermined halving cycle, occurring roughly every 4 years. This mechanism reduces the rate at which new Bitcoins are generated, often leading to price appreciation in the subsequent months. We're still within the cycle following the halving in April 2024, which may have implications for future price movements. Regulation. Regulatory frameworks around cryptocurrencies are evolving globally. While some jurisdictions are becoming more crypto-friendly, others remain cautious or even hostile. This regulatory uncertainty contributes to volatility and influences investor sentiment. Macroeconomic factors. The global economic landscape, including inflation rates, interest rate hikes, and geopolitical tensions, has a considerable impact on risk on assets like Bitcoin. Investors often turn to Bitcoin as a hedge against inflation and traditional currency devaluation. Technological developments. The Bitcoin network and its surrounding ecosystem continue to evolve. Innovations like the Lightning Network are aimed at improving scalability and transaction speeds. The emergence of Layer 2 solutions and the development of new use cases further enhance the network's potential. Arguments for investing in Bitcoin in late 2024. Several compelling arguments support the notion that investing in Bitcoin in late 2024 might still be a wise move. Scarcity. Bitcoin's capped supply of 21 million coins makes it a scarce digital asset. As adoption increases, the limited supply could drive price appreciation. This scarcity makes it a unique alternative to traditional assets like fiat currencies, which are often subject to inflation. Long-term growth potential. Despite volatility, Bitcoin has shown a consistent upward trajectory over the long term. Supporters believe that its disruptive nature, coupled with increasing adoption and utility, positions it for continued growth. Hedge against inflation and currency debasement. Bitcoin's perceived resistance to inflationary pressures makes it attractive to investors seeking to preserve the purchasing power of their assets, particularly in times of economic uncertainty. Institutional adoption. The increasing involvement of institutional investors lends credibility to Bitcoin. Their investment decisions are often backed by deep research and analysis, which could indicate long-term confidence in Bitcoin's potential. Technological innovation. The ongoing development of the Bitcoin ecosystem, coupled with the emergence of new use cases like DeFi and NFTs, highlights Bitcoin's staying power and future relevance. The evolution of technology around Bitcoin will likely unlock new uses and broaden its reach. Following the halving cycle, historically, Bitcoin has experienced price surges following halving events. While past performance is not an indicator of future success, the pattern is worth considering. Arguments against investing in Bitcoin in late 2024. On the other hand, several factors caution against blindly jumping into Bitcoin investment. Extreme volatility. Bitcoin's price is highly volatile and can plummet rapidly. This inherent risk can lead to substantial losses for investors who are not prepared for such fluctuations. This volatility is often a factor of its relatively young age and the still developing nature of the cryptocurrency market. Regulatory uncertainty. The ever-evolving regulatory landscape creates significant uncertainty. Stricter regulations could significantly impact Bitcoin's price and adoption. This uncertainty is a persistent risk and is something investors must always keep in mind. Risk of market manipulation. The cryptocurrency market is susceptible to manipulation by large players, whales. This can cause artificial price pumps and dumps, creating losses for average investors. The lack of complete transparency in the market makes it susceptible to this kind of activity. Lack of intrinsic value. Unlike stocks and bonds, Bitcoin does not have underlying assets or generate cash flow. Its value is derived from market demand and adoption, making it a speculative asset. Security risks. Although the Bitcoin network itself is considered secure, exchanges and wallets can be vulnerable to hacks and theft. This risk of losing funds through third-party breaches is a persistent issue in the crypto space. High transaction costs. Depending on network congestion, transaction costs on the Bitcoin network can be high. This can be a barrier for small transactions or for everyday use cases. Competition from other cryptocurrencies. A growing number of cryptocurrencies are vying for market share. Bitcoin's dominance is not guaranteed, and newer, more technologically advanced cryptocurrencies could emerge as preferred alternatives. Who should, and shouldn't, consider investing in Bitcoin now? Consider investing in Bitcoin in late 2024 if you have a long-term investment horizon. Bitcoin is not a get-rich-quick scheme. It should be considered a long-term investment with the understanding that volatility is inherent. Understand the risks. You should have a solid understanding of the risks involved, including volatility, regulatory uncertainty, and potential losses. Have a diversified portfolio. Bitcoin should not be your entire investment strategy. It should be a part of a well-diversified portfolio that includes other asset classes. Have a strong risk tolerance. You should be prepared for significant price fluctuations and the possibility of losing some or all of your investment. Have done your research. Don't invest based on hype. Do thorough research and understand the technology, the market, and the risks before investing. Avoid investing in Bitcoin in late 2024 if you need short-term gains. Bitcoin is not suitable for short-term trading. Its volatility makes it highly unpredictable for quick profits. Cannot tolerate risk. If you are risk-averse, Bitcoin is not the right investment for you. Don't understand the technology. Investing in something you don't understand is a recipe for disaster. Are investing more than you can afford to lose? Only invest what you can comfortably afford to lose without jeopardizing your financial stability. Are relying on it for your retirement savings? While Bitcoin might be part of a retirement strategy for some, it is not prudent to rely solely on it for your retirement. Conclusion: a cautiously optimistic outlook. Investing in Bitcoin in late 2024 is a complex decision that requires careful consideration. While the arguments for long-term growth and adoption remain compelling, the inherent risks of volatility and regulatory uncertainty cannot be ignored. It's not a question of if Bitcoin is a good investment, but when, how much, and for whom. If you're considering investing in Bitcoin now, remember to do your due diligence, understand the risks, and only invest what you can afford to lose. Treat it as a speculative long-term investment and make sure it aligns with your overall financial goals and risk tolerance. Don't let FOMO, fear of missing out, drive your decisions. By carefully weighing the pros and cons and taking a measured approach, investors can decide if Bitcoin is the right fit for their portfolios in late 2024. The journey ahead will undoubtedly be exciting, albeit with its share of ups and downs. If you're still watching, you've earned the inside scoop. Our well-researched price prediction estimates Bitcoin could rise to between $125,000 and $140,000 by early 2025, likely between February and May. Good luck!